Welcome to another episode of the show where we talk about things related to money and finance and the economy and all things related to the financial world. And there's no one better to do that with than Zach Abraham, who is the Chief Investment Officer at Bulwark Capital Management and also friend and sponsor of the show. And so today, Zach, we wanted to get your expertise about a topic that we admittedly understand very little. And that is this whole, there's been a lot of news lately about the U.S. dollar and other countries that are not particularly friendly with the United States dropping the dollar as its reserve currency. And like high level, we get that sounds bad, but at a layman's level, we have no idea what that means. Yeah. We're hoping you can help.
Yeah. Well, it's a hot topic, and it's one that we focus on a lot because I think in the world of, I know in the world of investing, currency movements and interest rate movements get looked past all the time. And at the end of the day, if you don't understand what's happening in currency and rate markets, you have absolutely no idea what's going to happen, because that influences everything, right? And for instance, one of the reasons that we don't buy the stock market rally that's currently happening and all these, why is that? It's because of interest rates. You can't have interest rates at 0 and raise them to 5 and think the bad things aren't going to happen, right? It's going to happen. Same is true on the currency side of it. If you get everything right and get the currency side of things wrong, you're in trouble, right? So it's something that we focus on actually more than most other firms. But I think the conversation is very multifaceted and it's complicated. So first of all, people need to have an understanding, and I'll try to keep it, not try to dig too deep in here to blow everybody out, but people need to understand, if you look at last year, we had the highest rate of inflation that we'd had in 40 years, and yet the dollar made a 23-year high, right? Why is that? And I think it shocked a lot of people. It didn't to us. That's what we were expecting. But the reason why is because we understand the way that the financial or the global monetary system works. Post World War II, the current monetary system was specifically designed to let the United States run essentially unlimited deficits without hurting its currency. Okay, and the reason it was designed that way has to do with Hitler taking over Germany and ushering us into World War II, ironically. So after World War I, the global economy, especially in Europe, was nuked, right? It was decimated.
Yeah. And
they took, which seemed fair at the time, they took the entire cost of that war and levied it against the German people. Well, the problem is that their economy was decimated. So they couldn't produce things. They couldn't sell cars and get tax revenue off of that and use that money to pay back their bills. So a guy by the name of Rudy Havenstein, who ran the Reichsbank, or the German central bank at that time, he did really the only thing that they could do, which was he printed money. And that's how he was paying the debt. And then that led to the hyperinflation that happened. We refer to it as the Weimar Republic. The old stories about people, the wheelbarrows full of cash, and they go back outside and they dump the cash out and take the wheelbarrow. That actually happened, right?
Wow.
And that's because, and to explain to people what it was, so you'd get paid at the end of the day and you'd race to the grocery store, because if you waited till the next morning, the cost of the goods would be up 40%.
Gosh.
Right? That's how crazy the inflation was. So that led directly to Hitler taking over power, right? So because of the unrest and all that kind of stuff. So at the end of World War II, it was actually one of the smartest things that I think the globe has done over the last 100 years, is they said, okay, let's not make the same mistake. We're going to have the only remaining economy that is intact, the United States, come into Europe and rebuild Europe via the Marshall Plan. And we're going to do it on the back of the U.S. dollar. And to keep the U.S. dollar from getting hit from all that spending, we're going to mandate that every country in the world, in order to buy any type of good, whether it's timber, any type of commodity material, you have to make those purchases in U.S. dollars, right? So what they basically did was, regardless of what was happening here in the United States, every country in the world had to own U.S. dollars if they wanted to purchase oil or natural gas or wood. Now they've made tweaks to that system, but that system is still in place, right?
Okay.
And so could that system end? Yes, but people need to understand the reason that these other countries are doing these things, it's not because they think the dollar is going to plummet. If the dollar plummeted 30, 40% in value, you would see parties in the streets of Beijing, right?
Yeah.
It's like a massive tax cut. If you have to use dollars to buy wood and, rock and, oil and all these other things, that means that the import costs for all your raw materials just drop by 40%. Right. So everybody's like, oh, they're pivoting away from the dollar because it's about to crash. And you're like, no. They're pivoting away from the dollar because because of the current setup, if we want to starve an economy of dollars, we can collapse it instantly. Like you look at Venezuela. Venezuela is a victim of their own practices. There's no question. But what really put them in a tough pinch is when we sanctioned them and took their access of U.S. dollars away from them, right? That's where things really got nasty for Venezuela. So these guys, and this is kind of one of the fears about what we're doing with Russia. When we wield that type of currency power against other sovereign nations, they have to, as a matter of national security, entertain ulterior strategies, right? Because if somebody new gets elected in the United States and just decides, hey, arbitrarily, we're going to freeze you out of the U.S. dollar system, then we're going to force other countries to go other directions. And that's kind of one of the things that I think that we should use it as a cudgel to make other countries come along, but we need to use it gently, because at some point they'll just look at you and say, you know what, we're going to form a new currency union. Now, that is a much more complicated thing than people are saying. We are not on the verge of a dollar collapse. Like I said, if the dollar, quote unquote, collapsed, everything would go up in value, right? So it's not this thing. I heard Glenn Beck recently, who I've got a ton of respect for. And I know that Glenn, in my opinion, at least, I think he's a honest operator that's trying to get it right. But he was talking about the collapse of the dollar, and I'm just sitting there going, no, not until the monetary system changes. It's not possible. And if it did happen, it would be a massive tax cut for the world. You would see more manufacturing get imported into the United States because the cost of labor would go down by de facto, right? So would it be a good thing for the U.S. consumer? No. But it would be offset by the benefit that it caused the rest of the world. And then it would also make U.S. goods far cheaper to purchase for the rest of the world. So it's not this doomsday scenario yet with the current. Now, at some point, you outrun your runway, right?
And I was going to say, because is that good long term? It probably wouldn't be good long term, right?
No, it's not. It's some point you outrun your runway, and you reach this saturation point. Where is that? Nobody really knows, because we've never had a monetary system set up like this. Yeah. But it's not the way. I've been hearing people talk about the collapse of the dollar since the time I was a child, and back then it was, we hit $1 trillion in debt, the dollar's going to collapse. We hit $5 trillion in debt, the dollar is going to collapse. Right now you're at 32, 34 and climbing, right? So it will happen at some point. Every fiat currency in the history of mankind has gone under. But, it's the old adage of, just because something is inevitable doesn't mean it's imminent. And what I would say is, for people that are concerned about that, don't be. The threat to the global economy at this point is the dollar going substantially higher. That is like if the dollar index, which is currently like a 102, if the dollar index got to 125, it'd be like a nuclear bomb going off in the global economy. It would just crush everything. Right.
But that sounds bad.
You're so calm about this stuff.
I know. Like it'd be a nuclear blast to the world. It's fine.
I mean, it's fine. It's totally okay. Yeah. It's totally fine.
Well, but see, but you got to understand, like everything else in our government, nobody ever fixes a problem. So the Fed figured out this whole dollar strength problem. So what they did is, since going into 0809, we had 8 swap lines set up between the Federal Reserve and other central banks. Now, the reason they have swap lines set up is if the dollar soars, right, all these other countries still need dollars, right? But in order to get dollars, they have to go into the currency markets, sell their currency, and buy U.S. dollars. Well, if the dollar's soaring, if they go do that, they're just adding to the problem, right? They're knocking the value of their own currency down. They're pushing the value of the dollar up. So the Federal Reserve set up swap lines with these other central banks where they can trade their currency off market and not impact the markets. It's like a cheat. They're cheating. Okay. Well, since 0809, we now have 30 swap lines set up with other central banks. So the Fed's answer to that problem is, well, if that becomes a problem, we'll just print more money, right? So it's the answer for everything, right? We'll just print more money, right? So that's really the interesting part of this. Is it now, to the Fed's credit, they need to try to keep a lid on the dollar, because the dollar going to 126 or 130, God forbid, that would usher in a new currency, right? Because the world can't function with the dollar at that level. So if you're worried about the dollar not being the world reserve currency anymore, that will only happen if the dollar goes way up. If the dollar goes down, there's no need for another currency. Does that make sense?
Yeah. I think so. I think so. So what do you make of the because like right now, because I was looking at this before we got on this call, and the headlines about this, if you just do a Google search on is the dollar being dropped as reserve currency by these countries, what does that mean? What's going on? And so you've got one website that says the Chinese yuan is going to replace the U.S. dollar as the world's reserve currency. You've got another headline that says dollar dominance isn't going anywhere, and here are 5 myths about de-dollarization. And it's like, what is a regular person who just knows how to spend dollars to make of this information? Like, how do we wrap our heads around all the differing opinions?
Yeah. So I think the best way is to get back to the facts, right? So what people forget about is when you talk about the dollar being in permanent decline as it relates to our purchasing power, I would agree 100%. Okay, and I don't think anything's going to arrest that at this point. It is in permanent decline. But when you're talking about the collapse of a currency, what you're talking about is the value of that currency as it relates to other currencies. So when people say the dollar is up, they're not talking about the dollar being up to a bag of groceries. They're talking about the dollar as it relates to the Chinese yuan or the yen or the Brazilian real, or right, all these other, the euro, right? So when you tell me, if somebody looks at me and says, and I've had these debates and I've had them on our radio show too, or the Chinese yuan's gonna take over and they go, and I go, why do you say that? And they go, well, the U.S. spending, and I go, You think U.S. spending and debt is a problem? And do you understand where the Chinese economy is, right? And not to mention the fact that the Chinese yuan is a closed currency, which meaning they don't allow it to free flow. The government pins the price. It is impossible for the Chinese yuan to be the world. All you have to know is this. So China is the second largest economy in the world, right? But about 70% of international monetary transactions happen in dollars. About 6% happen in Chinese yuan.
Wow. Okay.
Right? So why is that? Nobody trusts yuan. Nobody trusts it, not even their trading partners. So the yuan is not taking over for the dollar. All the problems that make the dollar is going to collapse. The Chinese have that problem in spades. It's exponentially worse there. They also have a massive demographic problem and a shrinking population, which is another discussion. But the one about the 5 myths of de-dollarization, that is much closer to reality. At some point, the one complaint that a lot of these other countries have that's fair is that we, unlike any other country, can be as reckless as we want to be with fiscal spending and monetary stimulus, and it doesn't impact our currency. At some point, the political outcry from that is going to demand another solution, but you're a ways away from that. It takes a lot to rework the monetary system, and of all the things that we're afraid about right now, the dollar collapsing isn't even on the list, and it shouldn't be on the list of any serious investor.
Okay, so basically our media... Right. Our media is full of crap then.
Well, it's like, it's so much fear mongering, right?
Right.
And so,
totally.
Right.
Okay. Yeah.
And it's because it's all of these statements made in a vacuum. Is the way that we're handling our fiscal responsibility. Yeah, it's insane. I'm not saying that what we're not doing it's nuts. All this debt and spending.
Totally.
But we're still the cleanest dirty shirt.
I love that. Oh my God, that's the greatest, Zach.
We're winning the ugly pageant.
There you go.
Well, you know what though? That really helped. I mean, I feel like that was a really nice historical explanation to where we are today, and like a way to kind of calm everybody down a little bit. I needed the calming down. I'm sure I'm not the only one.
Totally.
So thank you for that.
And you want to make this as bite-sized and edible as you can for people, but so I hope I didn't confuse. But you got to kind of know the history of it and realize actually the entire system was designed to let us run massive deficits without that was the whole design of the system. So to be sitting there looking at the dollar, wondering why it's not going down, you just need to look at the design and the makeup of the system, and then you'll understand.
They did it. Well, they did it so they could be like crooks and thieves.
Yeah.
That's great.
And like so many other things, right? Like the intention or the thought in the beginning was good, right?
Yeah.
They just should have undone it at some point. And the other thing is all the people worried about us not being the world reserve currency. If you're a person that believes our government should be held accountable and recklessly spends, it may not be. If we were no longer the world reserve currency, I think that we would have a much better managed government. I think it would be better for freedom. I think it would be better for us getting involved in foreign wars. I mean, think about if you don't have to adhere to a budget, right? You just print money. You're going to get involved in a lot more foreign conflicts.
Yeah.
You can afford to, right?
The road to hell was paved with good intentions.
Yeah, that's exactly right.
Always is, right?
Right.
Zach, where can people learn more from you and find out more about Bulwark Capital Management?
Yeah. So first of all, our radio show, we do a weekly show, Know Your Risk Radio. You can just Google Know Your Risk Radio podcast or Spotify or Apple iTunes or anything like that. And then also you can just go to bulwarkcapitalmanagement.com or follow me on Twitter at KYR Radio. And not too hard to find.
You should do it. Do it, everybody.
Thank you so much, Zach. We so appreciate your time today.
Thank you,
bet,
Zach.
guys. Thank you so much for having me on.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. Information presented is for educational purposes only. It should not be considered specific investment advice, does not take into consideration your specific situation, and does not intend to make an offer or solicitation for the sale or purchase of any securities or investment strategies. Investments involve risk and are not guaranteed, and past performance is no guarantee of future results. For specific tax advice on strategy, consult with a qualified tax professional before implementing any strategy discussed herein.